Hi, everybody. There's worse places to be than Palm Springs, so I'm happy to be here. And I'm happy to be at this conference for the first time. It's actually been really well done so far, so kudos BankSpaces people. Okay, I'm going to be talking about, you see the title, Retail Next, what is happening with Retail Next. But the main point I actually want to make is that here at BankSpaces, we're actually here to talk about people spaces where banking occurs. That is really what the branch is here for. It's why it still exists, because people want human connection. Now, thought I'd start with a few headlines of some things that were happening. Let's go back to 2019 Forbes. The retail apocalypse is upon us. The bank branch apocalypse isn't far behind. The bank branch is dead. Bank execs predict the branch is dead. 2020. COVID killed the branch of the future. 2020. And this one for sure was true. Closures reached record levels, 38% in 2021, of course, as a result of COVID. And even as a result of that, in 2022, Wall Street Journal saying banks are ditching their branches. Maybe you should too. But in 2023, U.S. banks added more net new branches for the first time in a decade. How about that? TD Bank announced they're renovating hundreds of stores and opening 150 branches by 2027. And we are working with TD on this. They're a wonderful organization, and you'll be hearing from them later. Bank of America renovates entire network and expanding to 9 new markets by 2026. PNC, also a partner of Adrenaline's, to invest, and also here, to invest $1 billion on building 100 new branches and renovating every branch in network by 2028. And of course, Jamie Dimon, in his ongoing commitment to branch banking, the latest, every media outlet on earth really reported on him claiming to open, which he will, 500 new branches and renovating 1,700 in the next 3 years. And Chase especially was asked in their Investor Day presentation at the beginning of last year why do you have a love affair with your branches? And they said, because they work. And they had all kinds of stats to prove why. 85% of business checking and 50% of mortgages are opened there. 75% of our balances are held by regular branch users. And the most interesting one, we have 6 times more engagement in markets where we have branches. And ultimately, why is this happening? Well, Jamie Dimon would say, people like to visit their money. And the nature of branches change, but people still go there. And so I'm going to be talking about that change. And really, this is all why we're here. Welcome to the branch paradox. Branches are closing and opening. Branches are shrinking and also growing. Customers want digital convenience and physical interaction. Branches are considered old school, but also they are essential to our future. Branch networks are your biggest expense and your greatest opportunity. And the real crux of why I'm speaking is that you are spending the money anyway. You might as well spend it smarter. So, some data for you. Ooh, that's a lot of data, so I know. But all this is saying, this is, I thought, an interesting one. When consumers choose to use the branch, why? Even when they know they have digital access to the following services. And Jim talked about absolutely the need to digitize, and of course, everything that can be digital should be digitized as much as possible. But look at all of these reasons why they choose to go into the branch. And Yes, maybe not comfortable online, maybe don't trust, too difficult, but at the end of the day, they just prefer face-to-face. It is easier face-to-face. And then this stat on the right, this is an EPAM report that just came out, but there are 27 reports behind it that say the same thing. When asked why they choose their primary bank, it's due to access to a local branch besides just awareness that you are there. And the funny thing about that is for many, they don't know you're there if you don't have a branch. Despite what marketing budget you think you have, you cannot out-marketing Chase, and you cannot out-marketing fintechs. So branch access, and then more of it. Why? Again, what are the most important features when shopping for a checking or saving account? After fees, fees are still number one. It is branch access, and 8 in 10 citing presence as a top consideration when opening an account. So, okay, we know that branches matter. What about young people? Gen Z. I don't know how many of you think about Gen Z. We thought they were little children, but now they have jobs. They're in their 20s. They're real, and they have money, at least a little bit. And they are important to our future. And there's this interesting dynamic that Gen Z has nearly 3 times the banking interactions physically with that of boomers. They look at that stat right there, 3.6 in branch and drive up compared to 1.1. And the reason is that, well, many reasons, but they are not afraid to ask, and they do not have the preconceived notions of what the branch should be that their parents and grandparents do. They think, this is my money, and shouldn't I be able to ask them stuff, and shouldn't I be able to go to the place where my money is? Yeah, and so this is making way for a new purpose. Now, they're not going in there a lot, and so what you see here is the average size of bank branches, at least of the top 5 banks, and how they're shrinking over time. They're getting smaller. So we know that. They need to get smaller as they make way for a new purpose. What should that new purpose be? This study is showing top 3 channel preferences by financial activity. And what you see at the very top of the list, why I want the branch, getting advice on a problem, applying for a loan, opening something, or closing something. We don't like that part. And most importantly, about half say financial advice is a top reason for visiting a branch. And that gets to this, financial advice and guidance. That is the new purpose. Yes, problem resolution goes along with that too. That is most important to most consumers when they think about why they go to a bank branch, and therein lies great opportunity for you. Also great risk, because people, especially younger people, want to come into the branch and be told something that adds value to their financial understanding, that helps them spend their money better, that empowers them. 50% opened new accounts after receiving effective financial advice. Major opportunity to create a bond of loyalty that will carry them probably into a lifetime customer. But also, if you don't have the right people and the right environments to deliver that advice, they will go elsewhere. They are right now getting financial advice from TikTok. So you just have to be better than TikTok at this point. But this is going to start increasing more and more, and fintechs are encroaching on your space. So how do you create the right spaces? This is the premise of how to do that. Data-driven strategy, meaning purpose-led design. And I'm going to talk especially about purpose. Everyone knows you are moving from some old purpose of what that was. Hopefully none of you have branches that look like that. I'm sure you don't. Into a new purpose. This in particular, it was called the Full Bank Coming Together. This was a prototype for First Horizon in Brickell, Miami, and it was a great example of an environment built for a new purpose of being a community center, being a place where retail, commercial, wealth all came together, and the power of the bank was at its greatest. But in this journey, I'm going to do a quickie history lesson that you probably didn't want. The history of bank branching, real fast. In the 1800s, it looked like this. It had a vault and a lot of teller lines, and it was big. And nothing changed for about 150 years until we got ATMs and a drive-up and also checkbooks. And so money started going out of the branch. They could be a little smaller. The safes could be smaller. Nothing changed again for another 30 years until we started having VAT tubes and drive-through lanes. We had some cash safes. We had our very first TCRs. And again, that area blue that was servicing cash transaction getting smaller, as in red, these were the little innovations, plus the internet. Online banking came out, and again, money started going out. Then we go to around, we'll call it 2010, and you see here 1.0, 2.0, 3.0, 4.0, modernized. So modernized. This is dialogue banking, universal banking. So now we can have open floor plan. Mobile banking is a thing, so more money is going out. And then we have, let's call it around 2020 or so, the future, and this is what's still being defined. It's going to look something like you see there, more concierge, more flexible, video banking, of course. There's a lot of money going elsewhere. Again, we don't need as many transactions. The point about this history lesson is this slide. Most branches today are not designed for what customers want or what you want as banks. So at Adrenaline, we have touched about 40,000 of the 100-ish thousand branches that exist today. And this is an analysis we did related to these models of about where we think the industry sits. And what you can see, over half are still in traditional. And by the way, we've met many a client who is still building actively traditional locations. Do not do that. Do not have teller lines. There are times and places for having things that look like teller lines, but the actual efficiency and effectiveness that what TCRs can do, allowing for staff flexibility, teller lines do not support that. Modernized, this is universal, this is open plan, but even this is going to be usurped. And here's the thing about bank branches, you can't push out updates, like app updates to them. Once you build them, they are kind of permanent for a while, and they take quite a bit of money to change. So you want to be as future forward as you can when you are thinking about what the branch of the future, by the way, the future's never here, so don't have a branch of the future, have a North Star that is constantly evolving, and I'll end with explaining that. But here's what's really happening. In this journey, you know there are less frequent visits, but more meaningful visits. There are less transactions, but more relationship things happening. It is not digital versus human, it is human-led. These are spaces for people and digitally enabled. It is not banker-led so much as it's customer-led. What do they need and want? It is not just for customers, it can be open to the community. It is not just a banking experience, it is an experience with your brand. The consumer has settled on the new purpose of branches, and none of these will be shocking, hopefully. But this is really in order of importance what they think. Number one, it is the front door. It is your beacon. Perceived convenience, by the way, is the number one reason why people choose to do business with you. If I perceive you to be convenient and ubiquitous, that is why I will choose you to be my bank, because I need access to my money. Number two is advice. In the moments that matter, how am I getting help and how am I able to expand my relationship? Number three is human service, which is largely about problem resolution, human connection at your most vulnerable times dealing with your money. And number four, then, is, by the way, what most bank branches today were built for, basic transactions. This is what the people want. But what about what you want? So what you want is important too, because you are operating a business. You are managing retail. You are managing your branches, and you have needs. And so married to the needs of the people are the needs of you. You need to use the idea that they want a front door as your opportunity for acquisition. You want financial advice that they need to be your opportunity for cross-selling and expanding share of wallet. You want the human service that they need to create loyalty with your bank, and you want basic transactions to be able to move into efficiency for your bank. And that is this spectrum here. In your branch network, you can save and grow. There is an opportunity. I've not yet met a bank that we couldn't help take some cost out of somewhere. This is the spectrum of saving to grow. These are the levers of value or the drivers of value in the branch channel that you can affect. And not all branches or markets are created equally. So as you think about your branches, think about these drivers, think about opportunities to save and to grow, and think about at Adrenaline, we help our clients develop archetypal models or build out archetypal models. You may have some, but are they right? Do they need to evolve? How do they get applied? How do they get executed consistently? This is what that looks like. And that will continually change over time. And so with that, with their needs to your needs, here's some examples of doing it well. Most of these are Adrenaline projects. Some of them are not. At those I don't know as much about, but what you see here are beautiful examples of using the front door to create beacons for acquisition. So this is United Bank in DC. When we met them, they were in DC, but literally no one knew they were there. They even said, don't tell anyone I said this, they said, should we just change our colors to red and blue? Because people in DC like that. And we said, no. We're going to celebrate your green. We're going to celebrate the aspects of your brand, and we're going to create these inside-out moments. And so all of these examples, that is the outside of the First Horizon branch in Miami, a credit union, Virginia Credit Union in Virginia, Valley National, a beautiful example, Valley's here as well, of a Fifth Avenue branch with a digital soffit. We won't, Mark, I won't tell them how much it costs, but it's a flagship, so that's okay. And look at how beautifully these project from the inside out and create beacons that people notice. Another example, creating community space. The purpose must evolve of your branch. And so these examples are integrating community. Capital One cafes, we actually worked with Capital One on their very first cafes in Boston when they first came out with the model based on ING cafes. It's been successful, they've evolved it over time, but other examples, that's a Credit Union of Texas in Dallas, that they've opened, there's just an adjacent coffee shop to their branch, and it's a community center. This is an example by Comerica of a co-working space that's being leased out to people to use for co-working. Think about new strategies like this for integrating with the community. They are spaces in your community. And then another example here, open floor plan. So in open floor plans, not only does it look nice, but it enables your bankers to go create the type of conversations in the area of the environment that makes the most sense. It gives customers and members options for seating, and it's flexible and reconfigurable. So when you think about future-proofing, the branch models of old with the mahogany everything everywhere had not much flexibility. You don't know what's going to happen in the future, and also the idea of being able to use the bank as a community space, that has such inherent value in acquisition and cross-sell and loyalty. And so these examples in the upper left, this is a community bank in Texas, another community bank in Fort Myers, Florida, incredible bank. And then below, this is again Miami, First Horizon, and then that Virginia Credit Union on the inside. By the way, notice at those desks, that is you and me seating, not you versus me seating. People want to collaborate, so think about the ergonomics and the experience impact of your seating. And then also now in this category of financial advice and cross-sell, so yes, open floor plan helps with that. So does marketing. Utilize digital signage, by the way, for your marketing. That is the only thing that has any chance of breaking through what is really you're competing with, which is their phones. Yes, you can have high-profile strategies, but also even regular strategies with playlists that integrate edutainment and information with your products and services, kind of like your marketing is the commercials, but you get their eyeballs with things other than your marketing. That helps enable cross-sell. And then think about, as we get into providing human service, how can you do that in a way that feels more concierge, that feels more of literally at your service? Because guess what? From a future-proofing standpoint, as cash keeps going out and out, if you have concierge-like greeting stations, again, not teller lines, that have TCRs, eventually those TCRs maybe can come out. And those are still areas that can be utilized for servicing transactions, for triaging, for initiating conversations. And here's a number of really well done brand-specific examples of that. And by the way, I hope you see inherent in all of these, everything looks completely different, even though it's doing functionally the same thing. And so when you look at these trends and things to do, you do them in a way that's right for your brand, for your markets, for the experience you want to create that's bespoke to your organization and your purpose, and it manifests in a unique way like you see. And then localization. Here's two beautiful TD examples that are highly localized with art, with sculpture, that are connecting to the local community. A series of prototypes for Charles Schwab in Austin that they do actually a ton of event space hosting at this space. And then a credit union, UW Credit Union in Madison, that has dedicated community walls, and everything from little to big. The more localization you can do, the better. And localization is really hard to do at scale. The more scale you have, the harder it is to do authentically, and then it just turns into welcome to whatever branch on the wall. Even that matters if you can do it. But the more genuine local you can feel to markets, the more you will connect. And then as we think about efficiency, think about amplifying the self-service. In the same way the branch is the beacon, the self-service is the beacon. So you see examples here, everything from drive-up ITMs or ATMs, and whether it's an ITM or an ATM means the same thing to a consumer. It is a beacon that is glowing that costs about 1/8 of the OpEx and 1/8 of the CapEx to deploy, and you are getting more than 1/8 of your share of perceived presence. So when you do this, look at that Regions branch. Stephen, where are you? Beautiful job on that one. And something else I'll mention too, when you think about leave behind strategies, if you're exiting a market, these are great ways to do that. You leave behind something that's really amplifying self-service presence. And the drive up, the poor forgotten drive up, that actually in COVID became important again. Think about making the drive up sexy. Look at that example of Incredible Bank. That's the outside, and the CEO of that bank said, make my bank not look like a bank. And so we tried, it kind of doesn't. But it is celebrating the drive up, bringing the inside outside, and great examples of that. And network transformation is a journey. So you see this lovely, maybe not super inspirational picture. This was the prototype, and this became their new prototype. And by the way, you should be rethinking what your experience should be at least every 5 to 7 years. And so you want to meet where you are, but keep evolving. And when you do, that new evolution of your North Star is not just a single location, it is a suite of locations. And this gets me to my final area of point making, which is that you have to break down the silos in your organization. And the bigger you are, the more silos you have. In the case of Comerica, there were a number of them, and not to single them out because I think they exist most places. They had projects that were going on that weren't connecting with the other. And when it comes to your customers and your markets, they experience you as one brand. So you've got to be thinking about bringing things together, and you've got to be planning for a North Star in tandem. So how we get there. This is a quote by a futurist that died 30 years ago that none of you have heard of, called Alvin Toffler, but I really like the quote. You've got to think about big things while you're doing small things so that all the small things go in the right direction. A North Star can break down silos. And so again, this is not branch of the future. This is alignment on a shared vision for retail delivery, for the branch experience, and for really everything going on. And you've got to think about people that are just doing their jobs, operating as they always have. That has to change because Jim hit it really hard this morning. Consumer expectations have changed, your new normal has changed, and so you have to break down those silos. And so think about planning as strategically as possible, as long-term as possible. So many clients come to me and they're in the middle there, or even an execution planning, and they have a branch and it needs to be great, and what do we do from here? The longer you can plan ahead, back to the point about future-proofing and creating something that will stand the test of time and evolve with time as much as possible, that's what you want to be doing wherever possible. And the way to do that, really in everything from creating a new model for a specific segment to creating the new retail delivery model for your whole organization, think about these two things coming together. You have to have data-driven strategy. And I didn't talk much about analytics today, but that has to be the underpinning of all of the foundational knowledge you need to have about where opportunity lies, what people are in your markets. You have to have that underbed of data, but that has to be married with not just cool design, good design, innovative design, purpose-led design. And the purpose needs to be marrying what the people need, what your members and your customers and consumers in general want, with what you need as a bank to be profitable and effective and ultimately serve them better. And that together is your North Star. And in order to do that, you need to have a shared vision and you need alignment. And if you bring all those things together, you can have successful retail delivery. It's simple, very simple. So thank you. That is what I had to say today. And we have some time for if any brave souls have any questions that they would like to ask.
We have one question right here. Yes, sir.
Thanks, Gina. Can you talk a little bit more about your thoughts of going from customer to community on the branches? We've got some, we call them community rooms, meeting rooms that can be used by community. I sometimes wonder, if they're really worth it. Talk a little bit more about that.
We have designed many a community room, and they're lovely rooms that don't get used. They could get used. If you are building true community space, you have to have a plan for community engagement. So it's a really good question. This is an example of somebody had well-intended purpose that didn't flow through execution. But in order to have community engagement, you have to establish who are we reaching out to, why is it there, and who's going to own making sure that engagement happens. So I would very much stress that if you do not have that engagement plan, the extra square footage for a community room may be better used somewhere else. But in the areas where it does make sense, and this is not going to be every branch, these are areas likely with more urban concentration or more population concentration in general, have a plan for how to do it. And I would also strongly advise you to pilot it first before building it everywhere. Don't make a lonely, unused community room.
We could probably do one more quick question if it exists in the room.
How do you see demographics going to a branch maybe than others, and how does that sort of weave into a design of a branch?
Love that question, because the idea of archetypal models that I mentioned is the answer to that question. Market demographics tell you where opportunity lies for you based on where you want to play and what segment of that market within who is in that market you would potentially attract. What people need is inherently critical to convey in what you are creating for them. So absolutely understand intimately not only who is in your market, but what is the target capture of those people, and then have that affect every aspect of how you're thinking about that branch. Is it younger? Is it older? Is it an opportunity for more cross-sell, or is it more about efficiency and loyalty? Is this a big acquisition play? And then most critically, maybe even more than the design, is your staffing model. Based on the people, the staff need to be ready to serve what those target people need. And so that's where the people and the place come together. And I've not talked much about the people either, but I can't stress enough that your spaces are just spaces if you don't have the right experience the people are bringing into them. People engagement, making sure your staff knows what you're doing, why you're doing it, and that they're the right skill set to serve, a huge piece of the puzzle.
Let's hear it for Gina Bleedorn.
Thank you.
Thank you, Gina.